Hello everybody, welcome to Bitcoin Not Crypto. You can find me on X and Twitter at Forrest Hodel. In today's video, I'm going to be doing a full prediction of Bitcoin's price for 2025. A base case, bear case, bull case, and ultra bull case. But before I do that, if you want to get yourself some Bitcoin, if you're bullish on Bitcoin and want to get it for the lowest fees from a non-custodial exchange, which means they never hold your Bitcoin for you, you should check out Bitcoin Well, and you can do so by clicking the link in my description, and you'll actually get some free bonus Bitcoin through their reward system, which is actually what you're seeing right now on screen. And you can scan that with your Lightning address. If you're the first to do so, you'll get my points, but you can also just use my link and get your own points and free Bitcoin through that. They also have non-KYC options available, and it goes to support this show if you sign up. Thanks everybody. Bitcoin has historically performed in 4-year cycles that are connected to the halving, which is the supply issuance of new Bitcoin being minted, getting halved, and the US elections, global monetary systems, basically more liquidity being in the market or less. And right now we're heading into the year where historically in these 4-year cycles, Bitcoin has performed the best out of all of the years in the 4 years. So with that in mind, I'm going to give some predictions of what I think will happen. So these predictions tied into them might be the causes for these prices, or also what will happen if these prices happen. So there's sort of some causation and correlation between the events and catalysts that will create these prices. We'll start with the sensible one. We're going to start with the base case, which my base case for 2025 is 150,000 US dollars. Right now, we're at 93 or so, coming into the end of the year, 2024. And so I expect that 150 is pretty modest. So that's, a 50% gain. That's nothing to scoff at, especially if you're in TradFi, but it isn't this parabolic blow off top or anything like that. Some notes here about the base case is this is not a signal that Bitcoin has lost at all, that Bitcoin isn't an asset to hold into the future. People will probably think that to some degree, and there will be a significant alt season if the base case is what happens. Some alts outperforming basically, and others not outperforming because they're worthless. So it's not a sign that it's failed, but it is a sign that these cycles will continue and that the cycle will play out. This base case is based on the diminishing returns theory from previous cycles, and this being kind of in line with what would be predicted if everything just happens based on history. In my opinion, the base case is actually maybe one of the best case scenarios because it's a modest price appreciation in terms of crypto and Bitcoin, but it also allows people like me that are in our prime earning era to actually acquire more Bitcoin. If we go into an ultra bull cycle, if a super cycle, these kind of things, that's great for people who already hold a ton of Bitcoin. It's not so good for people who want to acquire Bitcoin or are in their earning years where they can acquire more sats, right? So I imagine that the US stockpile will happen, but it will not happen in a way of them acquiring more Bitcoin. This base case is met by them just moving the seized Bitcoin from the DOJ into the Treasury Department. So it's a signal, and it will signal to maybe some other nations, but it'll be fairly underground if they're acquiring Bitcoin, and the US will not actively publicly add to that stockpile. MicroStrategy and ETFs just continue as business as usual. MicroStrategy continues to buy Bitcoin weekly, or maybe they slow down a little bit. They will do some capital raises with convertible bonds. And the ETFs just continue being the most successful ETFs of all time. And they just basically acquire more Bitcoin, but not in such a way that is going to create again, a super cycle or anything like that. It's just kind of business as usual for these two funds that are buying a lot. MicroStrategy I just lumped in as a fund. They're not really, but capital gains tax in the US and around the world basically stay the same. Maybe there's some slight changes in certain countries, but nothing super meaningful, right? This base case is basically just everything continues as is. So maybe a few more pension funds come out public that they're holding the ETF or Bitcoin. There's already been some that do. The percentage is rather small. No big nations become public holders of Bitcoin. El Salvador continues to stack. Bhutan continues to mine. Maybe Russia gets in there a little bit, but once again, not publicly, right? Because that creates a big FOMO event, which would create an elevated price, in my opinion. Bitcoin mining is embraced and encouraged and continues its trajectory to add on more renewable energy and using stranded energy. In the past, in the US, Bitcoin mining has been a target of regulation and taxation. So by encouraged, I just mean that the politicians are friendly towards Bitcoin mining, but not so much in a way where they're adding to it, where they have a public sector mining or anything like that. So that's the base case. Now let's hit the bear case before we hit the bull case. The bull case is going to be exciting. And of course, we should think a little bit about the bear case. Now, the bear case, I picked the number being 58,000. Now, the reason I did that, of course, is the 58 gang. I think that 58,000 is a huge line of support and resistance just in a technical way. And this will be a signal of people buying, right? And holding that line, not allowing it to dip much under 58,000. I think another huge support line is 80,000, of course. So 58 would be a real bear case if it got all the way down there in the year 2025. This would be basically a break in the cycle, 4-year cycle, because we should have an up year. We would have a down year if it ended at 58,000. So of course, this is a bear case. Some things have gone wrong, and we'll talk about those. So everything would have to go wrong, basically. MicroStrategy would have to make some extremely dumb moves. Right now, they are very under leveraged compared to what people assume, basically, that haven't done any research. But MicroStrategy would have to make some moves that put their actual fundamental business at jeopardy and would require them to actually become insolvent and therefore basically pay out to their bondholders. And in doing that, they would end up having to liquidate, right? Their bonds are not secured by Bitcoin. But if they got themselves into such a position where they literally couldn't operate as a business whatsoever anymore, then they would be forced to liquidate just to make their bonds whole as basically loans, right? So that would mean they couldn't get credit, they couldn't issue new bonds to pay off the previous bonds. There would have to be some insane, catastrophic, basically unimaginable event that would cause this. And once again, I don't see this bear case playing out for many reasons. The cycle is one, MicroStrategy being very solvent is another. So no nation state adoption. This means that the Trump administration doesn't create a stockpile of any kind, and no other nations talk about Bitcoin publicly. It becomes an unimportant political conversation. So maybe some paper Bitcoin is found in an important piece of the Bitcoin infrastructure at large. I wouldn't suggest or even think that it would be the ETFs, but maybe some exchange or something like that. Last bear market we had FTX blowing up, Three Arrows Capital, and Celsius, Terra Luna. We had paper Bitcoin at FTX basically, and paper crypto and paper money. The assets weren't there basically. So we would have to have something like that in something pretty significant to have a drawdown again to 58,000. Regulatory changes that make people not want to hold the ETF. Right? When people say, oh, BlackRock is buying Bitcoin, that's actually not true at all. It's 20% of the people buying Bitcoin are institutions and hedge funds, and the rest are advisors and, people, right? Investors. So those people, there would have to be some negative incentive for them holding this. Maybe there's a tax change regulation. Maybe these funds all start to jack up their rates. I don't know exactly. I couldn't think of anything like this happening as well, but these kind of events would create some obviously bearish signal. Regulatory changes that make taxation happen more. So that would just be some unfavorable tax law change to crypto holdings as an asset, maybe more capital gains or something like that that just makes it unfavorable. Global economic recession, where there's a liquidity grab from all assets into cash. We saw this flash crash basically happen in 2020 during COVID. And what happened there was all assets went down in tandem. There was no safe haven. The safe haven was a cash position until basically the QE and the Fed backstopped, came in and said, hey, your assets are going to be fine. Get back in the market. Because our GDP is incredibly tied to the market, so we cannot have it this low. So we are going to print trillions of dollars to make sure your assets go up in value. So there would have to be something like that. Again, some sort of black swan, right? The reason it's called a black swan is because you cannot see it coming. If we could see it coming, it would be a white swan because it's much more visible. So there would have to be some sort of global recession or systemically important nation recession that would affect kind of the rest of the globe in some way. Bitcoin being a global asset, being affected by sort of whatever happens anywhere to some degree, but especially to these bigger nations that might have some sort of major recession, right? Here I have another cause of the bear market could be that the US implements other cryptos into some sort of government position, and they basically turn out to be scammers. We know Trump issued the world financial coin, whatever it was, some scam coin that looked eerily like a pump and dump and had a huge amount of insiders. I mean, it was just crazy, right? Who could see that coming, right? So we could see more of that. We will see more of that. We've seen Charles Hopkinson or whatever going to Washington being laughed at. We've seen Ripple start to make its way in because they've basically designed a CBDC, and so whoever else wants to create a CBDC could take their technology of XRP and do so. If we saw a lot of these crypto people getting in and creating scams and it being sort of okay to create these scams, we could see distrust in this sector entirely. And I think that a lot of times we can see that crypto at large is the reason that Bitcoin goes down in a bear market. FTX was crypto. It was FTT basically was the paper Bitcoin. Terra Luna was also, it was a algorithmically stable coin, algorithm stable coin, and a corresponding cryptocurrency that was all BS as well. So we can see that crypto, and even Three Arrows Capital, right? They basically took people's money, did these loans, and that was all degenerate gambling and leverage trading on these assets that are not legitimate. So we can see that a lot of the bear markets are caused by crypto, and so this kind of catalyst could be more crypto in the world of that is actually accepted by the U.S. government, and this creating these big bubbles of that deflate rapidly when they're popped. We could see sideways markets happen for too long and enthusiasm slows. We do have to understand that the technology behind Bitcoin is amazing, but ultimately a money has value because people believe in it. So if there starts to be some waning of enthusiasm and belief in it being basically a global monetary system and the backing of all money and the soundest money out there, and we could see that enthusiasm waning just from a sideways to down market for too long and volume dropping off. Of course, we would see whales pump that back up again because there can just be so much manipulation in a thinly traded market. But this is just like part of what could create a bear market like this. The other thing here I have for a bear case is Bitcoin mining is pointed at by large nations as bad, and ESG makes a comeback. So we've seen this in the past. We've seen Bitcoin mining sort of be the victim, a targeted victim of harassment from nations saying, oh, they use too much energy. They're going to boil the oceans. They use as much energy as Argentina. And of course, we've seen the Bitcoin mining become more and more. It has this amazing trajectory of adoption of renewable energy. It's at now 57% of all Bitcoin mining is from renewable source of energy. So to me, again, this case is just not applicable, but it could just become a boogeyman, right? That politicians point at and say, hey, this is bad, this is bad. Don't look at what I'm doing. What I'm doing is okay, but what over there is going on is bad, right? So that could be another thing that could happen. I don't see that happening. I see basically game theory playing out that all of these things in the bear case are very low likelihood of happening. I see the exact opposite happening, and that's why I wrote the base case and I wrote my bull case, which is coming up right now. Bull case is just under 500,000 by the end of next year. This is in line to what is possible. What is possible with historical sort of the diminishing returns of the law of larger numbers and the adoption curve happening. This is not a super cycle. This still is in line with the cycle. With people's technical analysis and even the power law, right? This is even within the range of the almighty power law. So that is something to consider, right? It's quite possible that if we 5x basically in 1 year, which is wild to think about. So what we could see that would cause this to happen would be that Bitcoin is used in international trade alongside other currencies, probably predominantly by BRICS nations. However, we could see a little bit here and there from Western nations as well. Retail and institutional FOMO and adoption. Previous cycles were driven a lot by retail. We're going to see a little bit less of that. We're going to see a lot more institutions. We still haven't seen the wirehouses and a lot of these trading firms and advisor firms promote an allocation to Bitcoin. They're still kind of studying it, still being very cautious about it. I think BlackRock, which they have their own ETF, which is the biggest of the Bitcoin ETFs, is still pushing for like a 2% allocation, and that was kind of like that was a big moment of them even pushing for that. So what I would predict in this bull case would be a lot more of that, basically. Companies start implementing the Lightning Network for payments. So this would be that actual merchant adoption is happening on Bitcoin. We had this previously, I think around 2016 or so. Bitcoin was actually fairly getting some momentum with adoption before the block size wars and all this. And it became pretty obvious that the block size limitation was going to be a problem for handling a lot of transactions. So there needed to be some work on the code of Bitcoin. And there was SegWit, which allowed for layer 2s and allowed for actually cheaper fees within the on-chain as well. Because it divided up the information that was attached to a block. But the Lightning Network now works extremely well. I've used it multiple times at businesses that accept Bitcoin. And we could see this mom and pop, grassroots movement of accepting Bitcoin. But we could also see larger companies and corporations starting to accept Bitcoin again, as they did at one point. Dell famously accepted Bitcoin, and now they don't. So with the Lightning Network, there needs to be some education, right? There needs to be some education. Hey, Bitcoin's back and it works now in this specific use case. It's worked as a store of value this entire time. Now it works as a medium of exchange with the Lightning Network. Increased inflation and global monetary easing. So this is basically M2 money supply increasing. Inflation is really good for all assets because They're denominated in dollars, and those dollars are going down in value, which means the assets are going up in value in comparison to them. It also means that there's more easy money around, which means lower interest rates, so people can borrow. People will just be flush with cash, and they'll be looking for places to put that cash, and Bitcoin becomes the obvious choice. It's the obvious choice anyway, but there's a lot of people who are still oblivious to it and think that real estate is a good idea when it's a huge headache and it begins to rot and fall apart, and you always have to maintain it. Whereas you could just buy Bitcoin, hold it on the blockchain, hold access to it with your private key, and you never have to do any maintenance ever again. So that will be sort of something that will happen to big money players. I'm not talking like huge money, but I'm talking about just the kind of the wealthy people in the world that hold a few real estate rental properties and a big stock portfolio. They'll start to say, well, maybe I should diversify. Maybe I should buy some of this Bitcoin. It's performed really well, no maintenance fees. Maybe I'll sell some of this rotting drywall and rotting wood in the form of real estate. So other stores of value, just as I'm talking about here, don't increase at the rate of M2 money supply. Now, historically, if you track real estate and M2 money supply within a nation, they correlate pretty well. And it means that people are retaining their value by buying real estate. Now, what we could see here is that there ends up being a divergence. So there's more inflation, there's more M2 money supply being increased, and these store of value assets like gold and like real estate decouple. They start to trend downwards or sideways compared to the M2, which is going up, or however it ends up looking. But basically they decouple in a way that's significant. And this would be because of Bitcoin, not because of something else, but this would be because of Bitcoin, because people are realizing that they have to take money from somewhere to put it in Bitcoin. And they're going to be taking it from these other stores of value, like gold and like real estate, these inferior forms of stores of value, and put it into Bitcoin, which is a superior one. Increase of Bitcoin-related products, like what we have seen with the Bitwise Bitcoin Treasury Company ETF and the Strive Bitcoin Bond ETF. They haven't been approved yet, so what I would see in 2025 is those getting approved and the increase of creative ETF products that allow exposure to different sides of Bitcoin and with downside protection, upside, whatever, right? And allowing people to have different options to gain exposure to Bitcoin, which increases the underlying spot buying of Bitcoin. So Bitcoin mining happens on massive scale. Utility companies and power generation companies start implementing it as a first and last buyer and use it to balance the grid. So right now we have a lot of excess energy around the world. We have stranded energy. We have utility companies that have to balance the grid, and there's actually about 8% of excess electricity in the grid basically at all times to be able to supplement and balance when energy is needed along the grid. So what I see is that utility companies are actually very primed to start implementing in different sizes of scale Bitcoin miners to soak up that excess energy and to stop demanding electricity when there's an additional demand for it on the grid. And they can do that by turning on and off really rapidly. So that's just a no-brainer. Why aren't they doing that already? Because it takes them learning, and these utility companies are oftentimes really tied to the public sector, which is a slow-moving organization, and it just takes time for all of this to happen. So in 2025, I expect in a bull case that those things become public, those things become known, those things start to be implemented in big ways. SAB 21 goes through, and trusted banks are able to hold and lend against Bitcoin. So there ends up being some easy, safer ways to lend against Bitcoin. I know some Bitcoiners are going to hate that idea, but it's inevitably going to happen in the future. And hopefully when it happens, it's in the safest way possible. So banks are going to be able to start creating products and services that allow people to, allow them to have custody of the Bitcoin that somebody owns and lend against it and all these kind of things. This is probably going to happen, in my opinion, even at a base case. But in a bull case, this would happen and banks will adopt it rapidly and want to custody Bitcoin for other people. So the Overton window will shift greatly and Bitcoin-friendly politicians will become very popular. The Overton window is basically a concept of what is politically acceptable to talk about. And the Overton window has moved or shifted a lot when it comes to Bitcoin, right? It's been extremely popular for Trump to talk about Bitcoin, and other politicians have been getting a lot of support by the crypto community at large because of the Overton window shifting. So in my bull case, this shifts a lot. And the politicians that, talk pro Bitcoin, implement Bitcoin bills, Cynthia Lummis would be one of them, would gain in popularity, and they would actually see a lot of personal gains because of that, not just financially, but in the popularity of it, really secure their seat in the Senate or whatever because of the backing from the Bitcoin community, which it grows bigger and extends bigger in this bull case because more people are buying into Bitcoin. All right, so that's it for the bull case of going to 500K. So let's talk about basically the super cycle, the hyper Bitcoinization, 600K and above. I've kind of left this bull case, this super bull case, as not having like a fixed cap, not being like, 1 million or 800 million or something like that. It really just has to go above 600K in the next year to be in a hyper Bitcoinization situation, in my opinion. The reason for this is it breaks the rules of the historical trend of the last 4-year cycle situations of Bitcoin. The power law is broken. The power opinion is broken. The technical analysis that is technical analysis to some degree is broken. And the reason for this is the following. So it's used commonly in international trade and for big secure purchases of other assets by smaller institutions or organizations or individuals, such as real estate or even buying cars and things like that, larger assets. And that would be on chain. Because of the rapid increase of price, it becomes even more scarce as people are afraid to sell it for a weaker currency. So this is the idea basically of when there's a huge amount of price appreciation of this and it seems to be going on rapidly day after day. Of course, there's going to be little pullbacks even up to this 600K and above, but you can see it really obviously that if you traded it for some other currency, if you took profits or sold it, you would have a currency and not be able to buy back the same amount. And it's really just, it would create this fear of selling this thing. Now, there would be some people saying, well, there's a fear of, well, it's got to go down because just, like it's overhyped, it's overblown, it's got to cool off, right? So there would be people taking profits or selling as well, but it would create this kind of more general or a large amount of holders to be like, well, I'm not selling until this is for sure cooling off because I don't like day to day, it's just going up too much. So this would create a supply shortage, which would create the price increase. And this is inevitably going to happen in the future. And now, do I know this is going to happen next year? Absolutely not. But I see this as a full-on potential happening into the future because of the way Bitcoin is designed. 21 million supply cap. We've never seen that before. True absolute scarcity. So weak fiat currencies begin to unravel. Countries with hyperinflation rapidly adopt it as a store of value and medium of exchange. Governments unable to stabilize their currencies are forced to consider Bitcoin as legal tender. This is because their citizenry will start to want to use it as legal tender and want to accept it over these weaker currencies that are unraveling, basically to hyperinflation. So this would not necessarily happen in the US or the EU or in Canada or Japan or something like that. Although there would be inflation and those those currencies would depreciate like crazy to a Bitcoin situation like this. But I'm talking about countries like Argentina, countries like Turkey, these countries that are already experiencing some level of what could be considered hyperinflation, where a asset like this that acts as money, that could be money, that is basically sound money, becomes very, very valuable to people and becomes an obvious buy and an obvious sell to get rid of those other currencies. So there would be a rapid loss of trust in weak currencies and a rapid adoption by people in those nations of something hard like Bitcoin. And of course, with that as well is a loss of trust in stronger currencies as well. So people would even start to lose trust in some of the stronger currencies, Canadian dollar, euro. The US dollar would be probably the last to do this because they've been the reserve currency and they have the most trust, basically. They've been the cleanest shirt in a very dirty pile of laundry of currencies. And they're not clean at all. They got a little BO stank on them for sure. So even major fiat currencies like the US dollar and euro face scrutiny as inflation continues, central bank policies falter, and debt loads become unsustainable. So this is what would happen, right? If you experience hyperinflation, you are no longer able to really have a central bank that operates in the way that they do. And then the central bank is unable to pay or unable to help with debt loads of government. So the debt loads start to become unstable, and there ends up being basically currency collapse and huge economic problems within these countries that have adopted a weaker currency when a clearly better, sounder one exists. And those citizens within those countries that adopted Bitcoin as early as possible, and the early adopters out of the wide gray range of adopters of Bitcoin see the most success in their assets appreciating and basically experience the negative effects of a nation collapsing because of picking the wrong currency. They see the least amount of that effect. And we have the counter side of that, of course, as well. Not just the individuals, but early adopting nations have stability. So countries like El Salvador continue to become more and more stable in this situation. Bhutan as well. Even the United States, that has not sold off the 200,000 Bitcoin that they have, they could cement themselves as a relatively stable currency with the US dollar because of the backing of this Bitcoin, and perhaps they've adopted even more. Of course, the bull case that I've talked about in this video, everything in there also applies to this ultra Bitcoin, hyper Bitcoinization case that I have as well. Everything is just intensified on there. Real estate bubbles start popping as investors shift from real estate to Bitcoin and earn yield with less risk than ever before. So this again is basically SOB 21 and people starting to realize that holding your value in an asset like real estate is not great. So that means that in certain areas that have really heightened real estate bubbles, they're affected the most from this. And the price of real estate goes down to its utility value of the land and home, plus the labor that it cost to make that, and the maybe a small premium on it, but not much, because they've found a much better long-term asset. Now, the reason I don't really believe that this is going to happen next year is this is a lot of stuff to happen in a year. I think that we're still years off from all of these things playing out. I think the mentality of people to still hold on to real estate as a store of value, it's just so ingrained in there, and it really is a self-fulfilling prophecy. If people still believe it has value, then it does have value. So I think it's going to take a lot more time to shift into this hyper Bitcoinization of Bitcoin 600 and above. That's why it's my ultra bull case. It isn't my base case. It isn't what I personally think was going to happen. This is just more so what would have to happen for it to happen. So gold begins losing its monetary premium, and market cap of gold gets cut roughly in half. Maybe not all of that gets cut in half in the year of 2025. It's probably would go into 2026 and beyond, right? basically 50% of gold is just held in banks and has a monetary premium because of that. The rest is used in jewelry and industrials and electronics. And so there's a lot of gold value that is just this future monetization value because of the history of gold of having monetary value. So that gets eroded. That's going to be eroded no matter what situation happens here, basically, besides maybe the bear case. But in this bull case here, this hyper Bitcoinization bull case, that starts to happen pretty rapidly. And then there's what is gold's market cap? Like, I think it's maybe 12 trillion, maybe it's even 17 trillion. I can't remember the number off the top of my head, but like half of that being added to Bitcoin's market cap would make Bitcoin's price be massive, right? So that would be part of the money that would need to go into Bitcoin to create a price like this. So those are my 4 cases for 2025. I'd love to hear your predictions. I would say what one of these I think is most likely. Probably I see basically somewhere between the base case and bull case playing out. I don't think we're going to have a hyper Bitcoinization. I think we'll probably have a fairly muted cycle after this, which means that maybe the cycle has slightly broken maybe. I think probably we're gonna hit above 200,000, but we could easily only go to 150. It's really just dependent on all of the different scenarios playing out, how they're going to play out, how they affect each other. And of course, with economics and global economics, there's so many variables and so many things. Like, probably I've missed tons of things. That would be another thing to comment, anything that I've missed in this. But yeah, there's so many of those things, and they all interact and connect in so many unpredictable ways that it's really hard to make a price prediction. But this is just some scenarios, just a fun kind of experiment that I thought I would do some research on, and hopefully you guys enjoyed this video. Hopefully it was insightful in some ways of some different things that could play out, and I'd love to hear your predictions in the comment section below. Thanks, everybody.